Hello, my name is Patrick Grattan and I'm the proprietor of RevereTrading.com. In this video I'm going to show you how to conduct a really simple backtest to test a stock market strategy using the Revere Trading pre-programmed spreadsheets. These spreadsheets are available for free to everyone who purchases the book Developing Profitable Trading Strategies, A Beginner's Guide to Backtesting Using Microsoft Excel. This book is available on Amazon.com. To conduct this backtest, we're going to use a simple directional indicator that will simply compare the open and close on a given day. When we first open the spreadsheets, we open up to the main splash page here. Clicking on the Setup tab, we can set the parameters of our study. For this one, I'm going to use daily so that we get a signal every day. I'm going to change the periods to simulate to 2,000. This will be 2,000 days worth of data that it's going to download. Signal issuance, I like to choose after market close because that gives me all evening to place my trade. I don't have to do it right at the opening bell. Symbol, we'll use SPY. We'll just leave it like that. That is an ETF that tracks the S&P 500. And then we'll make sure the check mark is here for download historical data. And as I mentioned, we're going to look at the direction of the market on the previous day. So based on that, we need to apply for the open. And we're going to compare that to the close. And the day that we're going to do that on is going to be our most recent day, so we'll use 1 and 1. Okay? So this is the open, and we're going to compare it to the close. How do we compare it? And we have different choices here: equal to, not equal to, less than, greater than. Mainly you'll use less than or greater than. But how do you choose which one to do? Should you do a less than or a greater than? It's not very easy to guess at what would be better before you do the back test. For instance, if the stock market was up on the previous day, you may want to use the momentum. Say that the market has momentum and that it will continue to go up, so therefore you should buy. Somebody else might think that if the market is up, then therefore it's probably going to come back down. And so that you should sell. It's hard to know which is the right way, and luckily with the back test software like this, we can quickly try both and see which one is better. So let's just put less than in for this one. And then here we have the different scenarios. Scenario 1, your current position is cash, and if it's cash, the first thing it's going to do is decision 1, which is decide whether it should buy long or not. And again, that was just based on our criterion A, so we can put A in there. Right? A just comes from criterion A. We're not using B, C, or D in this case, so just A. If that's false, the next decision will be decision 2, deciding whether it should sell into a short position. To make that decision, it will use this cash to short decision 2 box. I don't want to do any short position, so I'm just going to click false on this one. And now that can never happen. So now if decision 1 and 2 is false, the default then will be to remain in a cash position. We also need to fill out scenario 2. Scenario 2 is when decision 1 is positive and you're long on the previous day, then the current day will be long. And decision 3 will be checked to see whether you should switch to a short position. We will click false for that one. Again, short position is not available. It will never go to short. And then finally, decision 4, if the position is long, how do we know whether we should go to a cash position? And in this case, it's just going to be the opposite of A. So I'm going to use not A for this one. And then scenario 3 is if the current position is short. But once again, decision 3 and decision 2 were both false, so short position is not even possible. We can just leave this blank because this situation will never occur. So there we have it. We got criterion A set for decision 1 and not A for decision 4. So we can go ahead and click Simulate Above Assignment. Simulation is now downloading the data, and we get the results here. So you can see that these results are not very good. The blue represents the back test that we just conducted, and then red is the buy and hold, which has done very well recently, as you can see. So clearly we did it the wrong way. We put less than here. We clearly should have put a greater than. So we can change that easy enough, like so, and then run it again. So you can see we can change parameters very quickly here. And now we see the blue is a much better performance compared to the previous one. This is the return graph. This is if you take all of your profits out as you make them. And compounded return graph shows what it would look like if you reinvested your returns. In the results output, you can see several of the different particulars about this strategy. You can see we have a revered trading strategy rating of 7. The annualized return is 9% per year, which is better than the buy and hold in this case. Sample percentage of trades is 62% good trades. And we're only invested in the market about 46% of the time. So we've effectively cut the risk in half for this strategy compared to buy and hold. So that's it. You can see how very quickly I can test a strategy using this software. And it's very easy to change from daily to weekly, for example. So there, I got weekly data there. We can run it again and see if weekly does very good. This is what weekly looks like. We could change to another symbol. For example, I could put an IVV. Try that one. Run it again. You'll download the IVV data. Looks maybe even a little bit better there for IVV. You largely avoid this dropout here in 2008. And or even QQQ. So this is just a very simple back test, very simple strategy. You can see that depending on which symbol you use and whether you use weeks or days, you're going to get different results. So there's lots of different parameters you can play with to try to develop your strategy. But the nice thing about this spreadsheet is that you can do it very, very quickly. It takes almost no time at all to test different parameter settings. So that's it for this. I hope that it makes it a lot easier for you to understand how to use these spreadsheets. Thanks for your time.